Right, I think the market is being a little short-sighted here in treating Magnificent Seven a little unfairly based off of these results. But the reality is that we have a massive generational trend that is unfolding in front of us, and it is going to unfold on a prolonged timeline. I think the risk of not spending is higher. And just like you said, you hear from Alphabet and many of the other CEOs as well that the demand for AI services is incredibly strong. So you're seeing these businesses clearly have these existing franchises that can absorb a lot of this demand, and that is closing the ROI loop. But beyond that, we think there is plenty of healthy demand from the broader enterprise that hasn't even come out there to really try out these AI services yet, right? So really a robust story here, and I think investors should continue to get exposure to the AI trade. But you may want to start thinking about moving beyond stocks like Nvidia again to position towards the inferencing story, and maybe even look at.
Are you investing in AI stocks? If so, you need to hear this before it's too late. The AI market is shifting fast, and missing out on the right stocks now could mean leaving massive gains on the table. Artificial intelligence investing saw a shakeup recently with the release of DeepSeek's R1 model, causing short-term volatility in AI stocks. But does this mean the AI investment boom is over? Not at all. Instead of seeing this as a roadblock, smart investors should view it as an opportunity. Some of the best AI stocks on the market are still positioned for long-term growth, and this short-term dip could be the perfect time to buy in. In this video, we'll break down 3 AI stocks that deserve your attention this February. Each of these companies plays a crucial role in the AI ecosystem, offering unique advantages that make them strong contenders for your portfolio. Let's start with one of the biggest names in AI and computing, Nvidia, ticker NVDA. Nvidia, NVDA, has been one of the biggest winners in AI, but after the DeepSeek news, it experienced a sharp decline as investors feared that companies would move away from Nvidia's high-powered GPUs. But is that really the case? Not exactly. In fact, DeepSeek relied on Nvidia's H800 GPUs due to US export restrictions to China. This forced them to optimize their models for efficiency rather than raw power. But here's the key point. US-based AI companies aren't prioritizing efficiency as much as they are performance. They need the most powerful GPUs available, and that means Nvidia's hardware remains in extremely high demand. Despite the recent dip, Nvidia's financials continue to look strong. The company is expected to see a massive 52% revenue growth in its 2026 fiscal year. With the stock now trading at just 27 times forward earnings, a reasonable valuation for a tech leader, this presents a compelling buy opportunity. Investors may want to consider getting in before Nvidia reports its fourth quarter earnings, which could serve as another catalyst for the stock's rebound. But before we move on, here's something to think about. Do you believe Nvidia will stay on top of the AI chip race, or will a new competitor shake things up? Let us know your thoughts in the comments. Next, we have a company that dominates the digital advertising and social media space while making massive AI investments. Meta Platforms, ticker META. Meta briefly dipped after the DeepSeek announcement but quickly bounced back, thanks to an incredibly strong fourth quarter earnings report. If you're wondering just how profitable Meta is right now, consider this. Ad revenue surged by 21% in the fourth quarter, pushing earnings per share up by a whopping 50%. That's the kind of growth Wall Street loves to see. But what's even more exciting is Meta's commitment to AI. The company is planning to spend between $60 billion and $65 billion on capital expenditures in 2025, most of which will go toward AI development. CEO Mark Zuckerberg has made it clear that Meta's goal isn't just efficiency, it's creating the most powerful AI models possible. One of their ambitious targets? Developing an AI engineering assistant with coding and problem-solving skills equivalent to a mid-level engineer. If successful, this could revolutionize software development and solidify Meta's place as a dominant AI player. Despite its stock trading near all-time highs, Meta's continued breakthroughs in AI could push it even higher. If you believe in the long-term potential of artificial intelligence, Meta deserves a spot on your radar. Finally, let's talk about a company that might not be as well known, but plays an absolutely crucial role in the AI revolution. ASML, TICKERASML, is the only company in the world capable of manufacturing extreme ultraviolet EUV lithography machines. These machines are essential for producing the advanced chips that power AI applications. In other words, without ASML, AI as we know it wouldn't be possible. However, ASML has faced some challenges, particularly due to strict export controls affecting its business in China. This led to a sharp stock drop in October when the company adjusted its 2025 revenue guidance. But even with these constraints, ASML still expects a solid 15% revenue growth at the midpoint of its guidance range. Recent data suggests that demand for ASML's technology remains strong. In the fourth quarter, net bookings soared past 7 billion euros, blowing past Wall Street expectations. This suggests that fears about ASML's business struggling were overblown. What's even more interesting is ASML's long-term outlook. CEO Christophe Fouquet recently stated that the rise of low-cost AI models is actually a positive trend for the semiconductor industry. Why? Because making AI more accessible means more people and businesses will adopt it, requiring more computing power and, by extension, more advanced chips. And since ASML is the key supplier of chip-making equipment, this positions the company for sustained long-term growth. Looking at the numbers, it's clear why these companies are leading the AI charge. Nvidia, with its $3.3 trillion market cap and 75.86% gross margin, continues to dominate the GPU market. Even with its recent dip, the company's strong financials and AI demand make it a powerhouse. Meanwhile, Meta's $1.8 trillion valuation and massive revenue of $165 billion highlight its strength in advertising and AI development. And then there's ASML, the quiet giant behind the scenes, providing the advanced chip-making technology that fuels this entire industry. Despite having the smallest revenue among the three, ASML's role is critical, and its 51.27% gross margin proves it's a profitable business. But what does this all mean for investors? Well, it tells us that AI isn't just hype. It's a massive, evolving industry with real financial strength behind it. Nvidia's GPUs are still in high demand, Meta is doubling down on AI investments, and ASML remains irreplaceable in semiconductor manufacturing. Of course, risks remain. Competition, regulations, and changing market trends could shake things up. But if AI keeps growing the way it has, these stocks could continue to be long-term winners. So, where do you see AI making the biggest impact in the next 5 years? Drop your thoughts in the comments. So, what does all of this mean for investors? Despite short-term market jitters, AI remains one of the most exciting investment opportunities of our time. Nvidia continues to dominate the GPU market. Meta is leveraging AI to supercharge its business. And ASML is providing the essential tools for semiconductor advancements. Each of these companies is positioned for success as AI adoption accelerates. Of course, every investment comes with risks. Nvidia's dominance could be challenged by emerging competitors, Meta's heavy AI spending may not yield immediate returns, and ASML remains subject to geopolitical risks. But for long-term investors who believe in the power of AI, these stocks offer compelling opportunities. Now, here's a question for you. Where do you see AI making the biggest impact in the next 5 years? Drop your answer in the comments. If you enjoyed this breakdown and want more insights into the stock market, don't forget to like this video and subscribe to the channel. We cover the best investing opportunities to help you grow your wealth, but remember, this video is for informational purposes only and not financial advice. Always do your own research before making investment decisions. Thanks for watching, and we'll see you in the next video.